Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host from AlgoBot, and today we're examining an expert advisor called Sinewave Trend Engagement. This strategy is built around John Ehlers' even better Sinewave, a smoothing filter that we use not to call market turns, but to detect the moment a trend truly engages. Over the next few minutes, you'll learn how the wave is constructed, how it signals entries and exits, and how the code puts it all together. As always, this is educational content only, so let's get started. So what exactly does the Sinewave Trend Engagement Expert Advisor do? At its heart sits a single indicator, the even better Sinewave, designed by the engineer and trader John Ehlers. Most oscillators are red for overbought and oversold turning points, but this strategy uses the wave in a completely different way. Ehlers observed that when this particular filter is normalized, its output pins itself near +1 or -1, while a genuine directional trend is running, and only swings smoothly back and forth through zero when the market is simply cycling inside a range. That behavior is the whole idea here. Instead of fading extremes, the strategy treats a push to the extreme as the signature of a trend engaging. The wave itself is built from the closing price in 3 stages. First, a high-pass filter strips away the slow background trend. Second, a super smoother cleans out the jagged noise. Third, the result is divided by a rolling measure of its own recent power, which automatically scales the output into a tidy range of roughly -1 to +1. We'll unpack each of those stages shortly. On top of the wave sits a slow exponential moving average that acts as a directional filter, keeping the strategy from taking signals that fight the broader trend. Protective stops and profit targets are both derived from the average true range, so they adapt to current volatility rather than using fixed distances. Who is this style suited to, in an educational sense? It's aimed at traders who are curious about trend-following logic and about signal processing approaches to the markets. It runs on a single time frame, so it adapts to whatever chart period you test it on. Remember, understanding a method is very different from expecting a particular result. Trading always involves risk, and losses are a normal part of the process. Let's walk through the mechanics step by step. The expert advisor works on completed bars, so it makes a decision once per candle rather than reacting to every tick. On each new bar, it advances the even better sine wave calculation using the latest closing price, producing a single wave value that generally lives between -1 and +1. The entry logic watches for the wave to cross through a saturation threshold. By default, that threshold is set at 0.75. When the wave rises from at or below that positive threshold to just above it, the strategy reads this as an uptrend engaging, and it prepares a long. When the wave falls from at or above -0.75 to just below it, that's a downtrend engaging, and it prepares a short. Notice that the strategy is looking for a fresh crossing, not simply a high reading. So it responds to the moment the trend commits rather than to a level that has already been reached. Before any position opens, a direction filter must agree. The expert advisor calculates a slow exponential moving average, 100 periods by default. For a long, the closing price must sit above that average. For a short, it must sit below. This filter is what keeps the strategy out of counter-trend saturation spikes, where the wave pins hard in one direction while the larger trend still points the other way. Now for the exits. This strategy has 2 ways out. The first is the concept zone signal. When the wave later collapses back through the zero line, Ehlers' logic says the trend has disengaged, so the expert advisor closes the position early rather than waiting. The second is a pair of protective levels based on the average true range. When a trade opens, the stop loss is placed at 2 times the ATR away from entry, and the take profit at 3 times the ATR. That's a reward to risk of 1.5 to 1. And because it's built on ATR, both levels widen in volatile conditions and tighten in calm ones. Only one position is held at a time per magic number, so the strategy never stacks trades on top of each other. Every rule is fully symmetric between longs and shorts. Let's look at how this reads in MetaEditor. At the top are the input parameters you can adjust before running the expert advisor. HP period, defaulting to 40, sets the high-pass filter length. Smooth period, 10, controls the super smoother. Signal threshold, 0.75, is the saturation level that counts as a trend engaging. Trend filter period, 100, is the direction moving average. Then come the average true range settings, a period of 14, a stop multiplier of 2, and a target multiplier of 3, followed by the trade volume in lots. Below the inputs are the two signal conditions. The variable cross-up is true when the previous wave was at or below the threshold and the current wave has risen above it. The variable cross-down is true when the previous wave was at or above the negative threshold and has fallen below it. Each is then combined with the moving average filter. Long OK requires a cross-up while the close is above the EMA, and short OK requires a cross-down while the close is below the EMA. If long OK is true, the code enters a buy. It reads the ask price, places the stop-loss 2 ATR below entry, sets the take-profit 3 ATR above, and calls trade.buy with the lot size and those levels. If instead short OK is true, it enters a sell. It reads the bid price, places the stop-loss 2 ATR above entry, sets the take-profit 3 ATR below, and calls trade.sell. As you can see, the long and short branches are mirror images of each other. That symmetry is a deliberate design choice, keeping the behavior consistent whichever way the market engages. Now let's bring it to life on a chart. On screen, you can see a series of candles with the slow trend moving average drawn across them. And below the price sits the even better sine wave in its own panel. That panel has three important reference lines: the positive threshold at 0.75, the negative threshold at -0.75, and the zero line in the middle. Watch how the wave behaves against those lines as the story unfolds. We begin on the left with a market that has been drifting quietly. The first two candles are small, and the wave is sitting low, rising gently from around 0.15 toward the middle of its range. There's no trend engaged yet, so the strategy simply waits. On the third candle, price begins pushing higher, and the wave climbs to about 0.68, right beneath the threshold. Then on the fourth candle, a solid rising body drives the wave up through the 0.75 level. This is the exact condition the strategy is looking for, a fresh cross-up through the positive saturation threshold. At the same moment, the closing price is sitting above the slow trend average, so the direction filter agrees. That's where you see the buy entry marker appear. With the long now open, look at what the wave does next. It doesn't drop back. Instead, it pins itself high, climbing towards 0.9 and then hugging the top of its range across the fifth and sixth candles. This is the saturation behavior Ehlers described, and it's the strategy's way of saying the uptrend is genuinely engaged. Price follows through, printing higher highs candle after candle. By the seventh candle, price reaches the take-profit target, 3 ATR above where we entered, and the trade closes there at the take-profit marker. Notice that just after, the wave finally unpins and begins sliding back towards zero. Even if the target had not been reached, that collapse through zero would have been the strategy's own early exit signal. Now the market character changes. The eighth candle stalls right near the top and closes lower, and the wave drops sharply out of its high zone. Price starts rolling over, and the close works its way back below the slow trend average. The wave is falling fast, moving down through zero and heading for the lower threshold. On the 10th candle, price prints a firm falling bar, and the wave crosses down through -0.75. This is the mirror image of our long setup, a fresh cross down through the negative saturation threshold, confirming that a downtrend has engaged, with the close now sitting clearly below the trend average. That's where the sell entry marker appears. The stop loss is placed above the entry at 2 ATR and the target below at 3 ATR. From there, the down move develops just as cleanly. Across the 11th and 12th candles, the wave pins near -0.9, staying saturated low while price makes successive lower lows. The strategy holds the short as long as the trend stays engaged. On the 13th candle, price reaches the take-profit target below, and the trade closes at the lower take-profit marker. Shortly after, you can see the wave beginning to lift back towards zero again, which would have been the unpinning exit had the target not arrived first. So in one clean sequence, you've seen both halves of this strategy. A long that engaged when the wave saturated high with the trend filter agreeing, and a short that engaged when the wave saturated low. In both cases, the exit came from a volatility-based target, backed up by the wave zone return through zero. That reward to risk of 1.5 to 1 and the ATR-based stops are what shape each trade's footprint. That brings us to the end of our look at the Sinewave Trend Engagement Expert Advisor. We covered the idea behind Ehlers' even better sine wave, how the strategy reads saturation as a trend engaging rather than as a reversal, the role of the moving average direction filter, and how ATR-based stops and targets manage each trade. We also walked a long and a short example through the chart, candle by candle. Remember that everything here is educational information only, and nothing in this video is financial advice or a recommendation to trade. If you found this breakdown useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment telling us which strategy you'd like us to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.